Okay, so we are talking about the bullish engulfing, and this is how it looks like. Sometimes it's not as perfect as this, but just compare the body of the first candle with the second one to see. All right, sometimes it doesn't look as nice as this. So this is the bullish case, and then the bearish one, it is the bullish candle that precedes the bearish one, and the body of the bearish one must cover the body of the previous one. So what is the psychology behind the bullish engulfing? It just tells you that when you see it in an uptrend, all right, and then you have a red candle print, and right after that, you see that strong, you see it in a downtrend, all right. So after the bearish candle prints, the next candle that prints, if it engulfs the body of the previous one, is just a signal that the downtrend may be ending and a bullish trend is about to begin. So at the initial stage of the trend, you will see this candlestick pattern there. And normally when you see it around a key level, it makes it high probability. For instance, maybe this is the support area that you are waiting for, all right, to take your entry. Once price gets there and you see that formation there, bullish engulfing candle there, it's just signal to you that the bulls are stepping into the market with much aggression. So you should be getting ready to take your buy depending on your strategy. Okay. So the opposite is true for bearish engulfing. Price may be trending up and then you see a bearish candle print, sorry, a bullish candle. And right after that, you see a bearish engulfing candle print. This is to signal to you that the bullishness is almost over and we are about to resume some bearish trend. All right, so that is the initial stage of the trend change. So you need to pay attention to these candlestick patterns. They are very powerful, especially when they form around the key level. All right, so you have your support or your supply zone or bearish order block. So when the candlestick forms right within that zone, maybe you can take your entry on the next one and your stop loss somewhere above the zone like that. But if the candle is strong like this, sometimes you have to take your entry at the midpoint of the engulfing candle. All right, you can measure, just use your eyes to gauge, or you can use the premium and discount to measure, and then you wait for market to pull back to at least 50% of that zone before you take your sell or your buy. So that is one powerful candlestick pattern. And so we've looked at bullish and bearish engulfing candles. The next is to go to the chart to see if you can identify some. So you have to make it a point to open your chart and then, please, a minute, a minute, a minute, a minute. Okay, so sorry about that. So once you've known the candlestick pattern like that, you just go to your chart and try to identify as many of them as you can. As many of them as you can. So this case, we are looking at bullish engulfing, all right? So you want to look at the chart where market was selling, and we want to look at this stage. So we sold even up to this point. And then from here, we saw that U-turn to the upside. We're on the daily time frame, verse 25. So we want to investigate the bottom. Can we see any candlestick pattern that tells us of a reversal? So we are looking for bullish engulfing. Can you see the chart clearly, please?
Yes, please.
Okay, so we want to consider these two candles here. And you can see that we have that engulfing candle. These two green candles, the one with the tail pointing up and the one next to it. Those are the candles we are looking at. Let me show you. We are looking at this candle and this candle. You can see that this is the body of the candle, this one. And then the next one is a strong bullish candle, which is even a pin bar. All right. It's a bullish pin bar. And when you combine it with the previous candle, you even have a bullish engulfing as well. So that is a signal, even after this candle on the daily time frame, attention should be bullish. So you are looking for opportunity to buy the market. All right. So these candlestick patterns we are talking about, you can use them on the higher time frame to confirm trend change. And then you can use it at your point of interest or where you want to buy or sell from as confirmation to enter the market. All right. So when you go to the lower time frame, you'll be looking for the same pattern or a similar pattern that tells you that price is ready to go to the upside. Then you take your trade in that direction. If there is any question, you can ask before I continue.
No question from my end.
Okay, so thank you. You want to check this side as well. Market was selling, so you have to identify a sell market. All right, we are looking at bullish cases. So from here, we were selling, and then we had a U-turn at this bottom here. Let's review the candlestick pattern that formed that told us that price was about to reverse. This is the tweezers, all right? This is not the bullish engulfing. We are considering these two candles. Tweezer bottom. You see that the opening price, sorry, the closing price of the previous candle and the opening price are the same. Even though we had a wick below here, but the bodies are almost the same. The tops and the bottoms are the same. All right. So this is a tweezer bottom, which is a bullish signal. All right. So you consider these two candles, which means that this day maybe you didn't trade. The following day you didn't trade. But after we closed as a tweezer bottom from here, the next day you are looking for your bullish trade. So on the third day, you are going to look for your bullish trade on this particular asset by using this candle. So you allow the candle to open, trade down a bit into a zone, and then you take your buy towards the upside. And even from here, we have a bullish engulfing for trend continuation. All right. This doji and then the candle, this candle. When we use them, you can see that it tells you that the bullish trend is still strong. The bulls are still strong in the market. The next day just opened and then it just kept going to the upside like that. So even if you miss the bottom here, you could have looked for buy continuation on these candles here. So that is the bullish engulfing. But sincerely, you don't trade them in isolation. It must follow your top-down analysis or multiple time frame analysis. For instance, if it doesn't form in a key zone and you want to trade it, maybe it might not work. All right, it might not work. For instance, let's look at here. We have a bullish engulfing pattern here. This doji, and then the next candle was a bullish engulfing candle. But look at it. It didn't buy immediately. And it bought only for some few days. And then the bearish trend continued. All right. But if you were scalping, you could have gotten some trades from that zone as well. And here we had a bullish engulfing here. Bullish engulfing. So after the two candles formed, the next day you are looking for bullish trade towards the upside. So even this zone could have been your target. Could have been your target. It comes down to your trading style. Some people are swingers, others are day traders. They don't stay in the trade for long. Once they make good profit, they are out. Like myself. So it depends on your trading style. Yeah. So that is the bullish engulfing and the tweezer. We have had a tweezer example. We even have a bullish engulfing here. Look at this. Can you see it here?
Yes.
So after that bullish candle formation, the next candle took us to the upside and we can continue buying. And here, when market started retracing, the market started retracing from here. Can we spot a bullish engulfing? Yes, we can spot them. See these two candles, bullish engulfing. The next day, the bullishness was resumed and continued. And look at here, market was what? Retracing. But after some small retracement, look at the bullish engulfing. The next candle can be traded. And then we went up in that fashion. Here, market decided to retrace again. Let me get my charger and plug my machine. Battery is running down. Yeah, around it. So when market retraced a bit here, look at it. Look at this pattern. Bullish engulfing. So you could have traded this candle to the upside. Here, just a little retracement. After that, these two candles, the bodies are not strong. They are dojis. So you look at dojis later. These are also reversal candles. But when we consider the next candle, you can see that we had bullish engulfing. So the next candle took us up. Engulfing candles, just like that. So those are the engulfing patterns. Engulfing patterns. So here, market was trending down. After we got to this bottom here, can we identify a bullish engulfing pattern? Yes. Look at these two candles. Look at the bodies. You see that the body of the green candle was bigger than this one. The next day we open and we are going up like that. And even whilst we are going up, look at another bullish engulfing pattern that has been created. So today we are doing some sort of retracement, all right? And maybe from tomorrow, you can still see price pushing to the upside there on this on this asset. So that is the bullish engulfing candle. Let's move to the next candlestick pattern. Where is my nose? So let me see, let me see, let me see, let me search. Okay, so let's check the bearish engulfing. The example of the bearish engulfing we just did for bullish. Let's do for bearish. So for a bearish engulfing, you are looking for an uptrend, all right? You are looking for an uptrend. You are looking for an uptrend. Market that is trending up. Um, so we are just doing basic trading. Like this is resistance area, all right? Let's do the support and resistance thing here. If they are check, ref is the way we do the support and resistance thing. So that is a resistance. It has been tested what multiple times. Test here, touch there, another touch there, and it's failing. All right. So around that zone, that is a key zone. You are looking for bearish engulfing pattern to take trades to the downside. And what do we find? When price touch the zone, can we see a bearish engulfing candle? Yes, I can see some here. These two candles, that is a bearish engulfing. It signals that price is likely to go down, and we have a weak rejection of the previous candle even to the upside. So if we take that candlestick alone, that is a shooting star. And you could see that the candlestick that were forming at the top here were not strongly bullish. So you had some sales that got this low. All right. Price sold and then started buying again. When it got to the top here, look at what do we have here? Here we have a bearish engulfing. So a bearish and bullish engulfing are two candlestick patterns. So you just identify two candles. Look at the body of this candle, the body of the next one, an engulfing candle. So the third candle can be traded. You allow it to open, trade up a bit, and then you take it down. And it danced around a bit, but eventually took out this low. Succeeded in taking out that low. Another candlestick pattern we will look at, which is very powerful, has been formed here. Three candlestick pattern. That is the evening star. These three candles. That is an evening star formation. So once you see that formation at a key level, this is a key level, resistance. It signals that price will want to sell. So you look for opportunity to sell down. All right. And even here we have a bearish engulfing pattern. It shows you that the bears are still strong. So the following day, we had some small bearish continuation until we had that bullish engulfing pattern here that took price to the upside again. See these two candles, bullish engulfing. We had another bullish pin bar, but small, and then boom, another big sell. So the candlestick patterns are very powerful if you learn them and master them. Go to your chart, identify them, but make sure that you are identifying them around key levels, not just at anywhere at all. Either at your demand or supply zones, all right? Look for them around that zone. So you can draw this demand zone down and wait to see how price comes in there and what form of candlestick pattern you are going to have around this zone, right? So you'll be looking for what? Bullish engulfing or morning star formation, which is a three candlestick pattern. So the morning star formation looks like this. It's a three candlestick pattern. You have candle one, you have candle two, which is a doji, and then candle three, right? So when you see it at support, form at support, tells you that the trend may be changing to the upside. So after the third candle, even the fourth candle started out pushing to the upside, the fifth candle as well. So that is how you trade these candlestick patterns. So I would like you to train your eyes on the chart to see some of these things so that so that you'll be better if you spend more time on the chart and you know exactly what you are looking for. Like these things I'm teaching, just go and look at it again. Look at it again, again, again until it registers in your mind. Don't don't joke with the charts. Just make time to be there. Always. Show up every day, even if you are losing. That is what has kept me going. Any question at this point?
Hello, Nama.
Yes, sir.
To identify the bullish and bearish engulfing, is
Yeah.
it so when you see them on, let's say, on a 15 minutes time frame, is it effective or less to get it on a higher time frame?
It is effective depending on your top-down analysis. But if you use the 15 minutes as your higher time frame, it may deceive you. The patterns are stronger on 1 hour upwards. If it forms on 1 hour time frame upwards, it's better. 1 hour, 2 hour, 3 hours, 4 hours, daily, weekly, monthly is strong. You can see them everywhere. So um that is it. I don't know if I've answered you. You can see them, they are there. Even on 15-minute key levels, you can still be trading these things, but you have to master them. Like you have to do it for a long time to be able to master it.
Okay.
So this is the 15-minute time frame. This is a demand zone, right? Or a bullish order block. All right. And even look at where the bullish order block was formed. Look at what pattern is this one? Help me. Anyone can answer. We are considering the two candles.
Is that bullish engulfing?
Exactly. So we were trading down, and then all of a sudden we had that strong bullish candle. So if we're going to trade, you wait for price to retrace a bit. You join the buy from there, your stop loss here, and look at it. If your stop loss was here, price dance around, attempted like he's coming to kick you out, but eventually it took off. All right. So we say price is fractal and the patterns are fractal. Fractal means that whatever you see on the higher time frame, you are very likely to see exactly the same thing on the lower time frame. Except that on the lower time frame, you have access to more candlesticks, and sometimes it becomes confusing and disturbing. That is why you have to stay with the so mostly every day closes like
Thank you.
what comes there. When I'm beginning a new day, I look at the previous day's candles, how they closed. I cycle through all the assets I want to trade. I check the daily candles, how they close, and I'm looking for patterns or candlestick patterns. That gives me a clue to which direction to trade into. So that is how I frame my bias sometimes. depending on the strategy I want to trade for the day. I've learned so many things, so I can apply them so many times. So we have that bullish order block or demand zone here. So even if you failed to catch any buy, look at it. Price came back to the retest the order block. So when price came, this is how you do confirmation entry. Look at the candles that came. After the red candle, I'm teaching so many things here. After this red candle, look at the next candle. We'll study this candle maybe later or today. It's a bearish one, but normally when it closes with the tail pointing up like that, the next candle will trade up. It happens a lot. And if it happens in an uptrend where it looks like this, the tail pointing down, the next candle opens and it will trade down. Not always the case, but most of the cases. So here you are looking for what? A reversal pattern. It can be morning star, which is the three candlestick pattern we just looked at. It can be bullish engulfing. It can be bullish pin bar. Any of these things can be looked for around that zone. So let's just say here you were waiting, here you were waiting, but here after this candle dipped below this low and closed with the wick inside the zone like that, even that is a doji, a gravestone doji, the tail pointing down, long tail pointing down. That was a signal. We can see a bullish pin bar here. So even if you didn't take it on this signal, you would have taken it on this one. Or even if you miss that one, you can still spot an engulfing candle. Look at it, these two candles. So if you're waiting for confirmation, these two candles. After the second one close, you can take your entry there, but your stop loss will be somewhere here. And price really came to scare you before it took off. And even if you missed this entry here, look at this area, another bullish engulfing. So after the second candle, your entry comes. I'm running out of time. We have 10 minutes to end this session. So after the second candle, your entry is here. Your stop loss comes somewhere here, below here. And you are good to go. So stop loss will be that wide. Yeah. You may have to reduce your lot size because of your account. But you're on the 15 minutes, so it's not so much. And if you even targeted this on that low, at least you leave the trade early, but you make some money. Yes.
Hmm.
And this is a supply zone or an order block. You were buying, and then we saw a sharp decline to the downside. And then after markets is going back to retest the zone. But look at how it tested the zone. It tried to break the zone severally, but look at the candlestick that formed. They were not strong enough. Dojis. And right after the dojis, we are looking for what? Engulfing candlestick patterns, or bearish engulfing, or evening star formation. And do we have that? I think when we consider these two candles, that is a bearish engulfing candle. Let me zoom out. These two candles, this one, and then this one. See that we even broke this candle aggressively to the downside. So you can trade on the next candle. You put your entry here. As soon as this one closes, you just enter here. You put your stop loss somewhere above the zone. And your immediate target is this low here. If you are going to go for other targets, you could have, for me, that knows fair value gap. I would have hesitated somewhere here. I see that that is the zone that is holding price now. That is a fair value gap. I don't joke with fair value gaps. My entries are two, either fair value gap or on other block. Last time I told you should reduce your entries to only two. You have two attempts to take the trade on an asset. So if the first one fails, you know you have the second chance. If you make it more, you'll be losing more. So if you make it two, you either lose twice or you lose one and you win one, or you don't lose at all and you win your trade. All right. So from here, you can see that price was reversing. Is that not it? We're retracing a bit. So we have this fair value gap here, which price has not tapped into. Look at a bullish engulfing pattern. Tells you that price may not really be interested in coming back to touch this zone. So maybe from here, you will continue buying. This high may break, and then price may come back to retest this zone. Right? But we are still bullish. So it is either this zone holds price to the downside or we break and we still continue the following day like that. In that fashion. May say there it looks very easy because I've done it over time, severally over time, so I don't have to waste more time doing this. When you spend more time on the charts studying these things, you become as fast and accurate as possible. So worst case scenario, this may continue and star formation. Maybe back into the other block or fair value gap here for continuous buying well. So maybe something like this for your entry. Not bad. So we've looked at the engulfing candle. We've looked at not so much about the tweezers, but at least you know the tweezers. We have looked at the tweezer bottom. We have looked at morning star. The opposite of the morning star is the evening star, which you can research on. And I've shown you how to locate them on the chart. So once you research on the candlestick pattern, come to the chart and look for them. And in case you don't understand anything, just message me privately. I'll respond. If not immediately, anytime I see it, I'll respond. Which other pattern? But I'm sure we all know these patterns. I'm sure, because if you pass through Pele Boss's hand, then these things should be there. You know, shooting star. It's a candlestick pattern with a long tail to the upside. Normally, it has a small tail to the downside, or it doesn't have some at all. So that is a shooting star. You know, pin bars. You have a bullish pin bar, looks like a hammer, and then we have a bearish one that looks this way, which other people also call inverted hammer. All right, so the tail is pointing up like that, like that. So the psychology behind this is simple. Market opened, started trading down, and then buyers took price to the upside and then almost closed it as a bearish candle. All right, so it became something like a hammer, a pin bar. And this one also opened, traded up, but sellers took over to sell the market down. All right, that's how the body closed small like this at this point. This one is the same thing. Market open, traded up, but there were sellers that sold. So when you see the wick, it's a rejection in price. It's rejection. So if the tail is pointing up, it tells you that sellers rejected higher prices. They didn't want the price to be here. They wanted the price to come lower. and it came as low as this. Maybe from here, you can start buying again to the upside. But from here to the upside, you may not make as much profit as when the price is cheaper here, then you take it to the upside. And I think these are the most powerful candlestick patterns that you can research on. So one, two, three, four, five, six, or six of them. Just make sure that you check them out and just type it. It will pop up. Type it on your search bar. Come, evening star will pop up. Then you select. Have to add a candlestick. The pattern will come. And candlestick pattern. And click on the images. Then you see them. So we have 1 minute, and the thing is wrapping up just like that. So
Nana,
yes, sir.
please, when you finish, can drop your YouTube this on the page, your link again.
Okay, all right. Okay, okay, all right. So thank you very much for your time. I think you'll make some time again. Tomorrow is Saturday. We'll meet again Saturday tomorrow to learn more about a trading career and whatever topic that will come in mind that I think is useful or helpful to you. You'll look at it. You may look at.
Thank you so much for your time, also.
Okay, all right, yeah.